Pear Incorporated. Thank you for taking the time to listen to our business pitch here. I'm Jacob Morton, the Vice President of Manufacturing, and I'll be introducing our business just a little bit. So, just a summary of who we are. Our mission statement here at Pear Incorporated is to revolutionize the personal and business computing system by providing unmatched quality and customer service. And when you take a look at our corporate culture, we try and go right off of our mission statement into the corporate culture. The two biggest things that we have is we want to create shareholder value. So for folks like you that we're trying to get to invest in our company, we want to bring value to you all, and we want to create that shareholder value. Secondly, the biggest thing to a business, the customers. We want to earn the customer trust, and we want to do great business every single day. A third thing that we like to do is we like to focus on value-driven markets. It's not necessarily how many units, but maybe what's the price of the units. We don't want to be in a market just to be there. We want to do things with intent, and we want to be there for a reason. And we like to focus on those markets that are going to bring us, and eventually our shareholders, the most value. Finally, we want to be a pioneer. We want to be innovative, we want to be creative, and we want to bring the best technology in the computing market to our customers. So, to give our investors a look into our current situation at Pear Inc., first we'll take a look at the customers. Right now we have sales offices in Shanghai and Paris, and we're going to expand more. Looking at the numbers, our customers are really happy with our brands, and they're really happy with the way we're advertising. Looking at our competition, you'll see in the workhorse category we're second place in the market share. Currently, Velocity owns that market share pretty comfortably, but that's with them owning two workhorse brands as compared to our one. As you come over here and look at Mercedes, you'll see here we are in pink again, 34%, sitting in second place. We have CompTel sitting at 42%. Again, that's with multiple brands in that area. Right now, we're only at one. As you look at Traveler, you'll see we're not involved there yet, and that's this is the quarter that's going to change. In quarter 4, we're going to introduce a laptop. So let's talk a little bit about the strengths and weaknesses here. We've been rated both the top brand in both Workhorse and Mercedes, and the top advertising, again, in Workhorse and Mercedes. What that says is, in both things that we're putting out the best product, and we're advertising it the best according to consumers who are the ones buying the product. Low productivity, that is just a product of, additionally, we undercompensated our factory workers. We've taken strides to improve that, and low productivity is not going to be an issue any longer. And then looking at stockouts, we've just lost some sales, partially due to the low productivity, and partially due to the fact that our brands and advertising is so good that we had more demand than we expected. A good problem to have. Looking at our major problems, Shanghai is crowded with about 3 or 4 companies. With that being the case, there is opportunities we miss sales and lose sales due to competition. However, as good as we've been and as good as our salespeople are, that's also an opportunity for us to steal sales from competition. Finally, looking at opportunities, we've got Sao Paulo as an untapped market. We're going to get right in there with a new sales office, and we're going to try and make some money there, as well as provide the consumers with what they need. And finally, the laptop market. Again, I told you in quarter 4, we're going to get there. And with our innovation, our engineers, and our scientists, I believe that's a market we'll compete in.
Hey there, my name is Josh Tiller. I'm the Executive Vice President of Sales here at Pear Incorporated. I want to first look at some performance reviews from these first 3 quarters that we've had. So we're going to take a look first at the demand here. And as you can see, it's been really cool to watch ourselves be right towards the top throughout all of this in the demand in individual categories for the Workhorse and Mercedes where we have products. We're highlighted here in the pink. Traveler, we don't have a product there yet, so right now we're obviously not there in the demand, but as Jacob talked about, we're going to be introducing a product soon. But I want to highlight this right here, which might be hard for you to see, but this is the total demand for the companies that we're competing with. So Pear Incorporated right here, our total demand is 1,235, which is just 20 units behind Velocity, who's sitting at the top. Now what I want to highlight is that they have 3 products out, while we only have 2. So they have 2 workhorses, while we only have, they have 2 workhorses and a Traveler, while we have just a Workhorse and a Mercedes. So we've been really encouraged to see our demand be right at the top, nearly tied for first, and being a whole product line behind, basically. And what is kind of complemented by that is our market share. So again, we're in the pink here at 23%, tied with Velocity at 23%. And again, that is with them having 3 product lines and us only having 2. Now, the point of focusing on this is not really to knock velocity. I think the cool thing is it just shows our potential. I think it highlights how well we're producing our brands, and that with only 2 product lines, we're still tied for first in the market share overall. And I think what you see there is really, like I said, the potential going forward as we move into these new markets and open new sales channels and put out new lines coming forward. So we're going to take a look at our strategies going forward, and I'm going to start by talking about our sales channels. So first and foremost, starting in quarter 5, we're going to have a new office open in Sao Paulo, and then in quarter 6, we'll be opening one in Chicago. Now we're really excited about that to see how our brand takes off in these new cities and how it adapts to the people there. Looking at our salespeople, so in quarter 4, we'll have 20 total, which is 10 at each site, and then in quarter 5, we'll have 36 total salespeople with 12 at each site. And then in quarter 6, we'll have 60 total, which is 15 at each site because we'll have all 4 sites open at that point. In quarter 5, with just 3 sales sites open, we're going to have 6 to 7 trained specifically of that total. And then in quarter 6, we'll have 7 at each site trained specifically for their brand to be selling. Taking a look at the compensation, so we increased our sales people pay. We did that because taking a look at our goals and our core values of our company, we want our company to be a place that people love to work and our employees are excited about coming to work. But also taking a look at our salespeople demand is right around 96 units per person, and we feel they deserve a reward for that. So increasing their salary, pension, healthcare, vacation, we feel they deserve that because of how much demand they're pumping out. So we're really excited about them, and that addresses the increase in compensation.
I'm Xin Lu, and I'm the VP of Marketing, and I'm gonna talking about the strategy for future of our marketing plan. And I'm gonna first talking about our new brand, and we will have the Fresh in quarter 4, and Fresh is a laptop, so we open a laptop market, and the price is $2,800. And we will have Fresh Elite in quarter 5, and price is $3,000. And we will have Rip Elite in quarter 6. The price is $4,250. And the price compared with the original brand, our new brand will have higher quantity, so we higher the price. We higher about $200 per brand. And once we add new brand, we will decrease the price of original brand. For example, for the Fresh, from the quarter 4 to quarter 5, the price will go from the $2,800 to the $2,675. And for the Rape, the price will go from the $3,900 to $3,725. We will go down the price about $125. And then we are talking about advertising investment. We will continue investing in advertisement with increase about 50% to 25% per quarter. And we will continue by market research in following quarter because we want to get more feedback and know how our competitors work.
I'm Jordan Cobb, the Vice President of Analytics, and I'm here to talk to you about some of our capital projects we're looking into. So this was the first quarter we could do research and development, and we started out and decided to go for the touchscreen, and we're hoping to roll out a really nice new laptop next quarter to get into that big laptop market we were talking about. And we've decided to license that to PWW for $850,000, and so hopefully that'll bring us some good capital and help us out a little bit. Moving forward, we're going to invest in big projects for our Mercedes. So we've got high capacity hard drive that's also fail safe, and we have our ultra speed processing power coming up. So hopefully we can roll out a really nice Mercedes in quarter 6. Looking to the future, by quarter 7 we hope to have high speed networking and our sustainable packaging coming out for all of our brands. Now looking at system improvements, this quarter we decided to do our quality control. So we hope to get our defects down and our cost of production down. Next quarter we're going to have environmental control to hopefully help with morale and have a more comfortable work environment. And finally in the 6th quarter we're going to have cross-training for our employees to help improve flexibility of our business and also hopefully get them more involved and more excited about what we're doing going forward.
So taking a look at our manufacturing into the future, we've decided to increase our fixed capacity in quarter 4 by 25, which into quarter 5 will allow us to grow to 100. Again, in quarter 5, we'll increase by another 25 units, which will take our fixed capacity to 125. Why did we do this? Because our projected demand and growth requires that our operating capacity be at a number that wouldn't be possible without increasing our fixed capacity. So while it is quite the investment, it's something that's going to be worth seeing as our demand continues to go up. We've also decided to increase our inventory. Due to stockouts in both previous quarters, we've really struggled with completing all of our sales, and due to that, we've lost money. In order to create value for you, the shareholder, and in order to deliver happiness to our customer, we've got to be able to fulfill more orders, and that's why we've increased our inventory. As it goes for compensation, our productivity on the factory line has not been where it needs to be, and thus we've given our factory product line workers quite the hike in salary, vacation, pension, and health benefits, hopefully to see that productivity skyrocket. And then again, in the factory workers and in the manufacturing, we did the same exact thing for the compensation of our supervisors. All of this to please our employees. We want them to be happy, we want them to enjoy work, and we want to get increased productivity from both supervisor and factory line workers.
All right, I'm Cameron Lyford. I'm the VP of Finance and Accounting, and now I'm going to dive into the numbers with you. Historically, we had a cash increase at quarter 3 to approximately like 1.47 million, so we were pretty happy about that because it was kind of like our first go around in the actual market from the test market, so we were pretty happy about that. And then our net income of 361,000 on revenue of 2.9 million, so that was pretty great for a first go around, so we're hoping that just keeps going up, which we predict it will. And future stuff wise, we're going to try to increase cash from quarter 4 to quarter 6 by about 4.78 million. Hopefully do a bit better than all these projections I'm giving, but you know, these are kind of like the realistic stuff. And revenue, we're thinking we're going to start about 5.73 million in quarter 4 up to about 18.21 million. So, you know, we have a pretty high goals, but I really think we can accomplish them with all the steps that we've taken. And net income wise, we're thinking about 4.969 million for quarter 6, so it's pretty stout. And total assets by quarter 6, we're thinking around 10.759 million will be about where we'll be at in quarter 6. So, and now that we've gone over the business side of things and kind of our projections for the future, both financially and operationally, I kind of want to go over the investment opportunity we have for you. So we're asking $5 million at $120 per share. And we believe that this is a fair evaluation of both our company and our individual abilities to run the company. And the earnings per share, we're projecting to be about $55 per share with a share value of about $550. And that would give you, the investor, total ROI of about 358%, and that's honestly unheard of, and I think it presents a significant opportunity for you to make a great return on your investment. And with that, I want to thank you for your consideration, and I thank you for listening to what we had prepared for you today.